told you that one trade, just one, grew my small account nearly 15% in a single day. This wasn't just luck, it was about recognizing a high quality setup, managing risk with precision, and sizing up at the right moment. This trade that I'm about to go over was a part of my 10K small account challenge that we're doing with the group. I document every move, every mistake, and every win. Today, I'm breaking down a killer trade on Netflix that checks all the boxes of what a top tier setup looks like. So first, we want to talk about why sizing matters. Most trading days are just about managing risk and waiting, spinning tires. But when a true setup comes along, your edge multiplies, not in frequency, but in intensity if you wait for the right moments. This is why it's crucial to size up when you have your best variables lined up. These trades are what ultimately carry the weight of your entire edge and your account growth. For me, it's not about pressing every trade, it's about pressing on the right ones, and Netflix was a perfect example of this. So the first step to go through is the context of the setup that we caught on Netflix. So if we look through the higher time frame chart, this trade happened on April 24th. So on this day where we broke out of all-time highs, so the stock had been setting up for quite a while at this key level. We had a recent break back over 1,000 on earnings, which was a significant technical development in the stock after testing multiple times. The stock put in a high on the last earnings at this 1,000 level, and then multiple times within this range tested this and also made very big measured moves from that key level of 1,000, which ultimately strengthens how important it is. So once you finally reclaim a level this key, you oftentimes will get some serious momentum through it. And on the last earnings report, we got a breakthrough that briefly trapped and then got continuation right up to the prior highs. Following a consolidation day after testing the all-time highs, Netflix set up this all-time high breakout. A couple of the variables that went into this trade outside of the technicals was the relative volume, the post-earnings strength from the positive catalyst that we had, and the strong RSI that set up in the pre-market. It has also a pretty big nuance with the recent macro developments. Most of the China tariff news and other macro developments going on were less impacting this stock. So Netflix have become very resilient to these headlines and really became something that money started to rotate into as almost a safe haven. Part of the psychology of this trade was also important. Understanding that, when you've seen many setups like this, your confidence can increase exponentially. So this is something that's built on experience. You're not just guessing. You recognize the opportunity for what it is, and that this all-time high breakout with the positive catalyst and all the variables present in Netflix really can set up a major move. So that allows you to position for the trade and really capitalize on it. In the pre-market, we noticed a couple additional variables that are worth mentioning. The RSI had cooled off quite significantly from the day before, following a big move higher. This divergence stood out to us, giving us confidence that if there was a first move on the open, that we could take the break. Now, the way that we manage this trade is a little different. There's two different ways that we manage trades. One is based off position sizing, where you take the total number of contracts and equity that you're willing to risk. So if you're willing to risk $1,000 in a trade, you take $1,000 worth of contracts. Stop sizing, on the other hand, is where you would base your risk on the stop. So say you want to risk $1,000, but the stop would be about 50%. You could then take more of a position using that stop to calculate how much size you would need. So let's dive into the execution of this trade and how we manage it. So we went into this with the idea to position size for this trade. The main reason for this was because of how far away the trigger was right at the open. So we had already made a very large move from the open to the entry price and trigger at 1,065. This makes it harder to base a stop off of, or your risk off of a stop like 1,045 or something closer here around 1,050 based on how aggressive of a move you had at the open. So knowing that, we decided to take the total amount that we're willing to lose in the trade on the entry rather than trying to adjust for the stop. We also knew that if this trade were to work well, it would likely lead to a very big move in price discovery above all-time highs that would ultimately set up more than one opportunity intraday that we're about to go over next that did offer an opportunity to stop size based off of. So once the trade triggered, there was a couple different ways that we managed it. So we immediately were looking to take some partials off into strength as the price moved higher. These options premiums moved extremely quickly, allowing us to take some profit off the table. All right, so let's dive into the execution of this trade. So we entered the 1,090 call right on the break of the trigger at 1,065. We position sized for this because risking or adjusting risk based off of a stop is pretty difficult given the strength of the move initially. The reason for the 1090 calls, so we have a +1 ATR target at 1094. ATR simply means that the stock's average true range over a 14-day period. So +1 ATR would have been that main target based off the range that Netflix typically sees on a regular basis, which gives us a framework to base our exits on and target for the day. So once the trade triggered, we looked to secure some profits. I entered a little bit, about one contract too much size on this, so I was quick to take some profit on this as the premiums gained very quickly. And then our typical rules is to sell into some strength, and then we were waiting patiently with some runners for another opportunity setup, which is this cash flow opportunity. As price had pulled back and created this bullish pennant intraday, it offered another opportunity like we mentioned before that we expected to see today on this Netflix trade. So with this type of trade that sets up on a name that's already working in your favor and very strong, you already have positive cash on the day, but then you also have a very tight risk reward window that if the setup continues to work in your favor, you can really push on the gas and extend your profits. So on this type of setup, you can take an entry on either the turn of break through the pattern or the pattern itself, risking the low of that pattern. So this risk was about 30% on the premiums, and we were able to enter more contracts on this turn and maximize our profit without really risking too much from what we had made already at this point. So I exited most on this pop because the premiums expanded very quickly as Netflix started to break higher on that cash flow idea. We used the 1100 call on this with the idea of catching some premium expansion as the stock was having a hard time fading back lower and strength was still present in the stock. And as you can see, we exited 1/4 on this push higher, which we're about to go over how I could have done a little bit better in this trade, and then the remainder of the position right at our main target of 1094. You can see the stock for the most part hugged around that area and didn't really get too much further, with the exception of tagging that psychological 1100 price at the end of the day. So this was a really amazing trade, but what could I have done better? There was a couple things. Overall, an incredible trade, and one that really pushed the needle forward on the account for the small account challenge. But there were a couple lessons and things to take away from the trade that I think are good to remember for next time. And in every trade that you review, you should ask yourself, what you could have done better, because that will lead to more profits in the future when you see other opportunities set up. So the first thing that could have done better is this exit here. This quarter exit at around 1086 was a bit premature. I'd seen the premium start to build, and I think seeing a little bit of that extension in the market caused me to get a little jumpy as we were getting near the 1094 price target. The stock had made quite an incredible move on the day, and this was an example of where I just got a little bit jumpy, and then really my plan was to wait and hold for the target, which we ended up hitting. And I did secure the remainder of the position at that target, so it wasn't all for nothing. But this exit here was a bit invalid. There was really no rhyme or reason for it other than the fact that the premiums had expanded quite a lot and I was seeing the position up, which is not a valid reason alone to simply take profits when you already have profit in the trade. You have to let runners run, and until there's a valid reason to cut, like hitting a target or if the trend is starting to fail, you want to make sure you stay positioned in the trade. The second thing that I could have done better was there's actually a second cash flow opportunity on this trade. One thing we watch is some of the EMAs and are trading on days that we're seeing a strong trend in the market. You can also just follow this line straightforward and you can see the trend here as the stock was just pushing higher throughout the day. This test of the trend, this second pullback intraday following the break of the bullish pennant, offered another opportunity to get long. This is a great example of a cash flow up where you can wait for the stock to pull back into the trend, get a reaction. That is an important step. You want to wait for it to react. And then on the turn, you risk these lows here where you can do stop sizing where you take, you're risking maybe 10, 20% on the options and you could take more size in the trade. So this allows you to get a bigger position without really increasing more risk. And you can take this up into the target to only maximize profits even more. So this was a second spot that I feel like I could have done better in the trade. For a little bit of context, what was going through my mind at this moment was if this had failed and turned lower, the 1100 call runners and the runners that I had on the 1090s would have been needed to be taken off to preserve profit in the trade based on adding that additional risk here. So that was a little bit of a tough call in the moment. I didn't want to give too much back. It was an incredible trade already at this point in the day. But with a small account, I think that's a valid reason or something that is understandable in this one. But nonetheless, it turned out to be a fantastic opportunity to add yet another third trade in this opportunity to maximize profits. So there are three main core lessons from this trade that I wanted to highlight. The first is sizing up in your best trade. Edge is not evenly distributed. It's super important that you don't get carried away in the daily minutia of trading. Waiting for big opportunities like this on Netflix are really what make your trading career. If you're able to size up at the right times, like on setups like this, they can lead to outsized returns, and these types of opportunities don't present themselves every day. The second point is experience is what will help you identify these repeatable patterns. So if you're newer to trading, make sure to give yourself a bit of grace and patience and put in the work as well. Go back and study these types of top opportunities and build the pattern recognition so that way, as you become more experienced and see them more frequently, you'll be able to capitalize them like I did on this trade. The last point is that execution is layered. We went through, this trade, and ultimately execution was pretty good. But even as an experienced trader, there was a couple areas that I could have improved on. I could have caught this second opportunity as a cash flow up, and I didn't really have a very valid exit here. So all in all, really solid trade, but there's always something to learn. And by taking the time to review your trades, your entries, your trims, asking why you exited, this all matters in helping you gain more experience and trade these setups with confidence. And with these 3 points, it's important to understand that even with a small account, you can trade and think like a pro or someone that is trading a larger account. It requires discipline, and that discipline and skill that you build is scalable to any size. If you're spinning tires or your wheels, ask yourself, are you risking the most when your edge is the strongest, or are you trading every setup the same? Let me know in the comments if you want to see more breakdowns like this, and if you're following the small account challenge, hit subscribe. I'm tracking every trade, good or bad, and post a review in the Discord.